Testing 1 2 1 2. Good evening, good afternoon, good morning.
Good evening.
How's everybody?
Evening.
Good, good.
Great stuff, great stuff. I trust we are all rested and ready.
Yep, yep, yep,
Great,
yep.
great, great. Okay, now let's get those questions in or comments. How was last week? Uh, what worked, what didn't work? Let's go over that. Any questions? All good? Comments?
I had a question on the group, but it was not answered.
Which one? Which one?
I remember I asked when maybe there's certain news maybe of US dollar, then there's more than one which give one it is hawkish and another it is dovish, meaning one it is good for the dollar and another one is not good for the dollar. But those news are at the same day. Maybe their interval it is just 2 hours maybe time. Now, when
This
maybe
upcoming data.
yeah,
The
what you
upcoming
say?
data, or is it something that has gone past already?
Upcoming data.
It's upcoming data, you say. What day is it?
Yes. I was just asking in a scenario
Yeah.
that a scenario maybe in a certain day like today, but in the news of today there are more than maybe three news upcoming events which are going to happen. Example for US dollar. Now, when those news have already happened, but maybe there was a news of employment claims, unemployment claims, it came positive, meaning good for the dollar. But after a few hours, there's another news of US dollar, maybe I can say PMI. Then that news came negative. Then maybe afternoon or later of that day, there's another news maybe of a certain maybe if FOMC member committee speaks, which you when you try to interpret it, it was bad for the dollar. Now it is somehow makes. How are you going to trade on that day? Because the news there are like three news,
Okay.
but they are giving
Mixed
different
data.
results.
You
Yes.
get economic data, possibly a speech also in between, giving out mixed signals. Sit on your hands. Sit on your hands, guys. Sit on your hands, right? You want to trade when the data makes sense to you. Now, sometimes the data might come out nice and clear, but not make sense to you particularly. You don't force the trade. Simple, right? You don't force the trade. Now, we're going to have a lot of scenarios like that where, excuse me, we get a lot of mixed data on the same day regarding the same currency. Sit on your hands, right? Wait for clear price action, let the market, because remember, even if you may think that you have a clear understanding of what should happen in the market, you you don't always, you're not always going to have a favorable trade. Because unfortunately, as retail traders, we don't have capital to move the markets, right? So to a certain degree, we have to play price action. We have to play it out as it presents itself, right? So, for example, but the biggest data, honestly, if if all are of high impact, I don't think there's anything that would be any bigger or any more important than central banking announcements, right? Central bank
Mhm.
announcements, those will always be the biggest news, right? Because that shapes, financial markets, right? For
Yeah.
example, the recent, interest rate cut decision. It's a big one, right? It's a big one. Um, yeah, so that one don't overlook. If there's anything that will overshadow anything else, it would be central banking policy. Now, any other macroeconomic data, well, such as, let's say, PPI, CPI, which is inflation. PPI also still a measure of inflation. Um, say labor data, right? All that data is data that the Fed or any central bank would look at, right? They monitor that data because it informs their monetary policy decisions. Remember, I said, all this macroeconomic data are like gauges of the economy that a central bank would look at, which is the driver of this vehicle. Then they would determine, okay, this is a little too much. We need to do X, Y, and Z when it comes to our monetary policy. Now, the biggest theme, right? The biggest theme for the last, say, 2 years, right, has been inflation, labor. Inflation, labor. And I would say inflation, labor, and I would say, I guess, overall, the health of the economy, right? Uh, Everybody's been trying to get the inflation numbers down to that 2%. This is most of these developed economies. We're talking the ECB, with BOE, Canada, which what's Canada's, I forget their central bank, Canada, Australia, etc., New Zealand, right? New Zealand, the Swiss, right? Everybody's been trying to get that inflation to 2%. Now, we know what contributes to inflation by now. We've got commodities such as, of course, oil, which is one of the largest contributors of course, inflation. But that's not the only thing that contributes to inflation. Yes, we understand that, having a lot of money in circulation affects that. So how do we get that money out? By hiking interest rates. And it doesn't only have that effect, right? We are looking at also the labor, right? More people employed, people earning more, it contributes to inflation, right? So most of these central banks have been trying to get their unemployment rate up. In other words, they wouldn't say to see people lose jobs, but essentially that's what it is. People need to lose jobs, and whoever survives this, they need to earn less. So wages is also a contributor to inflation, right? So whoever's still in the labor force needs to earn less. That equates to, a cooling off of inflation. So that has been the theme, I would say, for the last 2 years. And in other words, what I'm saying is that data is very important. It's very market moving. Maybe say 4 years ago, it wasn't, it has always been important, but it wasn't such a big factor, right? But the Fed has been, uh, how can I put it? The Fed has been adjusting or changing their monetary policy in response to this macroeconomic data: wages, labor, inflation numbers, and basically the overall health of the economy. We're talking GDP, of course, manufacturing data, all of that. Is that a little clear?
Yes, yes.
Okay, thank you. And so, yeah.
So sorry. So before they are going broader than what I've said, inflation, labor, and wages. Before 2 years, they are looking a wide range of stuffs. Or
Come again?
I'm saying you've said for the past 2 years, the many central banks were concentrating on. You've said inflation.
Yes.
Labor and wages. What about maybe before 2 years? Were they concentrating on a lot of data?
I would say it was much more broader because there wasn't anything out of the ordinary in terms of the economy, right? So this is where we say rates are neutral, right? Everything seems rather stable. So we are looking at a much broader picture in that sense. Everything else, I guess, would be looked at equally. right? So that's what it is right now. They've been fighting inflation, which is the biggest thing, and anything that would contribute to inflation would be looked at much more closely. So we look at all the measures of inflation, right? And all possible factors that could contribute to inflation. Commodity prices, especially, of course, oil being the largest contributor of inflation in terms of commodities. Gold doesn't affect inflation at all. What else? What would affect? Yeah, wages, like I said, labor. Yeah, all the others that I've just mentioned, right? Those are the things that we've been looking at in the last 2 years. Are we moving on?
Okay.
All righty. Any
Maybe
other question?
maybe just another question. Maybe I can ask. Can you maybe have you ever experienced a scenario where you are waiting for the price to reach a certain support level? You have already get the buys. Now you are going to the charts now to accompany it with the price action. So when you go there, and then you see that the chart, the best way to buy it is from the support area, but you find the price has not reached there. It is only at the middle, but it started. The buyers was you need to buy. Now you are waiting for the price to reach at the support where it is the best place for you to buy, but the market does not
Doesn't
go
get
there.
there.
Then you find it's going up, 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 up. Then you have already missed that trade. Maybe in
Yes.
those scenarios, is it like there was so strong news maybe appeared, which will, and I'm asking how in those scenarios how are you going to deal with them?
How do you
What
tackle
happened?
it? Yeah, it's a missed opportunity, but it doesn't always have to be a missed opportunity, right? Remember, I've always said, don't fall in love with your trade ideas. We could look at a possible support level where we want to ideally buy, and we've got the fundamentals to support that buy, but price doesn't quite get to our support. What do? Mark up the next level of resistance. Once that is broken, apply the same method of approach. Use now that level that has been violated, previously resistance, which now needs to be support. That's where you can now catch those buys again, right? It's going to happen more than you can count, right? For example, remember just last week, 2 weeks ago, in fact, on a Thursday, we planned our buys on gold 2600. It's a psychological level. It makes sense. Price has violated it, needs to come back to it. Indeed, price does roll reversal, but it doesn't quite get to 2600. Gets to 2605. Right? Gets to 2605. We've missed that buy. But we don't say, let's wait for it. And we can see now it's gone. Right? Yes. Eventually, one day, it's going to get there. But we can't, we can't wait, right? We have to apply, I guess, a bit of sense and say, okay, where is the next level of interest? That level has been violated 26, rather, we did not get to 2600. Where is it going? It didn't get to 2600. See, 2602, give or take, we got there, right? So we have violated it. We are looking at this trend, this entire region. That's how we caught them, right? Those pending orders are still valid. Well, if we don't really get there, we really move further away from this price point, they might not be necessary to keep for the short term. Might have to delete them, right? But we didn't just stay there. We figured, okay, we're moving. Where's the next level?
For the next step.
Okay, fantastic. So, any other question, guys?
Yes, I do have a question.
All right, ma'am.
I was working on the GBP, and I looked at it and then I realized that it had violated a level.
Mm-hmm.
And then, as you said, like on a higher time frame, H4, you know, the level that was violated, it will go back to
Yeah.
it. Now it did that. Now my issue is I find myself struggling with the entry point.
Mm-hmm.
Like I know when it goes back, that's the time
To enter.
to join, yeah,
Mm-hmm.
to go in.
Mm-hmm.
But now I'm not sure, is it better to use Fibonacci to be sure of the entry point?
Nothing wrong with that. That tool can be used as a confirmation tool, right?
Okay.
That tool definitely can be used. What trade were you looking at entertaining? Is it a sell? Is it a
I'm
buy?
entertaining a sell because
A
when I
sell.
looked at
Okay.
at 4 hours, I
Mm-hmm.
saw that it had a level, a support level. Visit the angle, and then but now I put in the trade.
What call? Maybe I can look at it. Let's see what level it was, and then see if indeed we had that role reversal. Because I want to use Fibonacci for you and see if yeah, you've got the price point that you were looking at as support.
Okay, now I always use an iPad. If you go to
Okay.
4 hour time frame,
Uh-huh.
you'll see that support level.
Okay. So we have this one here. I suspect maybe this is the one that you're talking about.
It's
right?
the one on the left. That one on the left. The one to the left.
To the left. Is it not this one? Oh, my line is choppy. Is it just me?
I think you need that week to the left.
Testing.
That week to the left.
To the left, the wick, yes.
Left.
You see that wick that
This
goes
wick
there?
here?
Yeah,
Yes.
This. Okay.
That's the level that I am.
Okay.
Yes.
Okay.
So when I looked at that, I said, okay, it's violated. But then I knew that it's supposed, then it retraced to revisit the angle when
100%.
to put in the trade. Then I realized I'm not sure yet of
Let me make it
my
a
entry point.
1.300 or because actually I managed to get this. Well, I think I managed to get the weekend that got flushed out. Seems when we have eventually we close below it again lower, so we do that retest. Now, I'm quite comfortable selling this, right? I'll tell you why as well, because and I'm not necessarily bearish. I'm not extremely bearish on GU, nor am I extremely bearish on EU as well. But we are playing the structure as it is right now, right? Fake out it did foot, and now today basically the 22nd we validated South African time. This previous candlestick, the 4 hour just closing. This would bounce in at this point as a seller. It is selling here. Current price you want selling.
Okay.
Worst case scenario, you figure out. Rather, let me put it this way: where's your stop loss? I'm gonna put it half US high.
Yes,
okay.
The previous high. Yeah.
Previous high. Yes, that gives you, of course, a better chance of being sustained in your sell trades. But you need targeting exactly is the level that we spoke about. If you want, okay, and we are, if you look, right, still very much bullish risk that we might read this structure that we've been in.
Yeah.
Okay. Yeah. Sorry, guys, my line. Yeah, it's just a little choppy. The confidence in those cells is if we definitely close below, right? If you validate that structure, that's where you gain a bit more confidence. Does that really mean that the bulls are completely done? No. Because which we've just did with gold, and before bulls actually start to show up again. Of course, close below that price point, I think definitely we should definitely be entertaining those.
Yeah.
Clear sense, perfect sense. Okay.
But Mr. Lebo,
questions?
Mr. Lebo, maybe from
Yes.
Well, but it should be backed up now with the fundamentals.
Not necessarily. You mean the sales?
Yes.
Yeah, definitely. We would want to really trade with confidence. We want to back it up with some sort of fundamentals. Now, sometimes it's not always going to be clear, right? We might scratch our heads a bit, but it's always best to have or entertain a trade that you have fundamental backings of, So I would agree with that 100%. Right? The fundamentals
Yeah.
to be there.
Because I'm saying that because do you see how it broke in there in it broke that support, then it went to retest a little bit deeper. For me, I thought that it was just a fake breakout. But when I went to the fundamentals, I came to realize that the dollar is still strong. So that's why I think that deeper retest it failed. Then it continued going until we are seeing now it's going down.
Exactly. Right. We've been getting strong macroeconomic data from the US. Now, also what contributes to dollar strength, of course, is geopolitical events such as the Middle East, GBP. I mean, last week we also had data that negatively impacted that. So yeah, fueling this move to the downside on GU. So 100%, you want to trade, or you find it to be much easier when you have fundamentals to support your trade.
Yeah.
Like I always say, your technical analysis may be great, but your trade decision needs to be fundamentally sound. I'm sure you've seen that over the years. I've used that for the longest time. Technical analysis may be great, but your trade decision needs to be fundamentally sound. And that's exactly what Mr. Kelvin is saying.
Yeah.
Guys?
Thank you.
Yeah, sorry, go ahead. Was there something there? Okay. So last, what is it? Thursday, we ended off, we looked into those monetary policy reports. We finished off with looking at the effects of, I would say, QE on the dollar and the gold chart, right? Was that clear to understand? As we go deeper,
yeah.
You saw QE. Let me go back here, actually. It was on the charts. We saw that QE, right? Low interest rates, followed by QE, bring about a lot of liquidity into the market, devaluing the dollar and pushing gold prices up. Okay. Now, and I did say I want us also to look at the yield curve. But before we do that, I want us to continue looking at gold. But I think before we go deeper on gold, fine to review where we are. If you still, it's all right. The flowers, guys. We said, okay, fine. The party we met, Rob said, well, sure. If you're in the trade and you're still holding, perfect. Continue to hold. Fine. If you're out, It's okay. Perfect. On my side, only appeared, I think, yesterday, but I was on the road. So I didn't want to share that with you because doing technical analysis, right? Then we higher. Now, yesterday, that was, and for it gave us an opportunity. It had already actually hit. Yes, sort of late to the party, but for us, and alcohol, right? This here, remember how we got to this price point, 27.36. I said, yes, 2,700 is a key psychological price point.
Yeah.
And if that is violated, as what I said, if there's role reversal happening above, after violating 2,700, you can enter. So let's see if 2,700, 2701, right? It almost got there. I think some may have caught it. Anybody? Somebody? 2,700? Violation.
In those after prices broken those psychological price levels, you just wait for the pullback when we enter.
Yes. Whenever we break a psychological price point, expect a retest. That's an opportunity to enter. That's your opportunity to enter, right? So 2,700, as we had targeted, we said those psychological price points will be the hundreds. 2,700. Where are we going now? 2,800, 2,900. We are less than $300 away from 3,000, a level that we had targeted or projected 2018 already. Right? We are quite close to it. Less than $250, we could easily get to that price point this year, right? Especially with the the election's quite close by, with that uncertainty starting to, build up as we, go into those elections. We might see, some gold appreciation, right? Coupled, of course, with the geopolitical events that are taking place. That keeps definitely gold elevated.
Mm.
Okay.
Okay. Right.
So it means after passing a certain psychological price point, where it is up to another one. It is one maybe, what can I say? I think 27. Is it 2700?
29.
So it means
2700.
in the middle there, like 2750. It is not a psychological point.
2750 is a psychological price point, right? 2750. Numbers that are rounded off, definitely are psychological price points. That's a fantastic point, right?
Okay.
Because actually, I had written here for you, and I'm eyeing the possibility of a correction at 2750/2751, right? 2750, we may just see, some bears coming in, right?
Yeah.
So I'm looking at that. We might, as we can see, 646, we're not too far off. So 2650, I'm expecting some bears. I'm going to attempt it. One trade sell, come, roll reversal, boom.
Yeah.
50, going target now 2800, right? Projected, right? So now this, so it could respect this zone. We measure has got a rhythm. So we're simply going with the rhythm, right? Every time frame has got a rhythm. Nice and clear?
Yeah.
The zone, that rhythm, 2788, we might see it go a little sideways, just like we did here before getting to 2800, that key psychological price point. That's where the real bears are. But if you violate it, expect roll reversal, go in again, buy it, target 2900. That's how you're going to eat this elephant.
So there we need to wait for the pullback now.
Exactly.
If someone wants to buy now in the near future, maybe today, tomorrow, maybe after tomorrow.
Say that again. Say that again. I'm just losing you.
Because for me, I've already taken out my profit, but if I want to continue buying gold,
yeah,
so which
you're buying, you can still buy gold at current price, of course, to that 2750. That's the first mark, right? 2750. Expect those bears to be there, right? 2750. Now, of course, if 2750 fails, expect some sort of roll reversal above at 2750, and then push it higher. But for not happen this level here, 2736, perhaps, like I said, if we close above 27 or 2750, right? That 2750, let me mark it out. 2750, where you would want to see the market play out something like this was to buy, because yes, we've got those pending orders for buys here, but if we don't quite get there, then let us see how the market behaves. Where is my pen? Pen. Give me a sec. All right, my pen is not there. I'll use something else, right? Okay, 2750. Then we'll target 2800. Okay, this thing has gone crazy again. I think I clicked it too many times. But is it clear to you?
Yeah.
Okay.
Okay.
Level?
Yes, ma'am.
I think I understand you, then I think I lose you. When you talk levels, like you're saying 2750, why does it jump to 2788? What about
Say, ask that one more time.
I'm trying to understand these figures of these levels.
Yeah.
Like you're talking about 2750.
Yes.
Then you jump to 2788. And I'm trying to understand how do you do that?
All right. No, these things and bring them up, right?
Yeah.
We measured this move here, the range, and we said fine. Now, what? Because move to done that, we haven't been there so for our next TP. Right?
Yes.
Pushed, we've made there. Okay, and moving it up.
Also, you're actually measuring the action itself. Okay.
Yes, we're measuring the
I
rhythm
just thought
itself.
if it's 250. Oh, okay. So
Right?
this is where it's coming from. Okay. I was really
Exactly. So now
confused with this. That's
no,
okay.
fear not. We're in safe hands. There's on that rhythm that we've played the double zeros, the hundreds, 2800
Okay.
into the side is now between 2736, right? And this is basically our support. Let's put it there. We were playing good cedar market. Do this. Let me just change the color. Where is the color? Okay. All right. No color. All right. There's the color. I decided. Okay. Right. We could push up, 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 come down, and then up, up, up into the zone. Right? It could play out like that. 27.50. It's a psychological price point. We could catch some sells, few pips to the downside, raise funds for the bigger move to the upside. Right?
Okay.
Now, many out there have got the risk appetite to go in right now and simply continue holding. Somebody out there, it makes sense. And I'm one of them. But I always want to, I guess, give you, how can I put it? Sensible trades. I don't want you to be blowing your accounts, right? So somebody could go in at, current price, right? And maybe their stop loss is here, but this is what they're targeting, right? Maybe their stop loss is just below that point, the previous low, and they're going in right now. They're going for it. But I'm saying you could do it this way. Either you have your pending orders here, right? 27.36, 27.30, 37, run about there. Spread it out. Price could do this, come into them, activate them, and then push higher. First scenario, okay? Second scenario is that your pending orders here don't get activated. We violate 27.50, trickle down, buy at 27.50 to target that.
Okay. Yeah.
Okay. Alrighty. So that's how we're going to play our gold. That's how we're going to play our gold. And gold, there is absolutely no. I still see us being quite bullish on gold, especially if we can even see some sort of depreciation on the dollar. That will fuel. That is definitely going to fuel those pulls out of gold. Does that make sense? Right? And with our dollar level of resisting into it, will there be enough bulls to push higher? Hard to say, but we are definitely guys to sell at this point. Right? So let's see how it plays out. Let us see how it plays out. Now, what else? EURUSD. I remember you were in those cells, EURUSD. Last week, I think it was Friday, just off my phone, I shared possible resistance. Let me see if I can replicate that here. Let's see if I can do it here. Where were we? I think we're looking at, let me see if I remember. I'll move this down here. Was it here? Okay, no, I don't remember. Let me check quickly. I'll tell you how. But the crux of it anyway is that those cells definitely are still at play. I just wanted to get those levels one more time. Oh, let me get Calvin back in. Oh yeah, it's not this low. It's this low. It was, where were we? A little different with the phone, so I won't be able to do that. I can't tell you exactly where we were. 1.088. Let's see, 1.088, 1.088. Where is that? Is it higher? Yeah, okay. I think I remember now. 805, okay. I'm gonna push this. 1.088. We're looking at something like was the first one. Then we had this here. I think something was it Friday for the cheap Friday. Then I asked where to from here. Are we selling? Are we buying? Had a liquidity grab. We pushed a little higher. See that? Yes, it initially played some tricks, but the sells are still very much in. For anybody who's in there,
they're still backing this EURUSD because I sense dollar is still strong.
Oh, yes.
Euro still weak.
So we still have, yes, indeed, some dollar strength, right? Yes, we are playing at a crucial resistance region on the dollar index, but not presenting any loss of momentum yet. So for any bears, EURUSD, has been playing out in the last couple of hours. Retest. Current market price would be a favorable place. In other words, you could sell now. Stop loss just above there. Let's say 1.0818. TP, there it is. We've already established that from last week, 1.0. I want us to spot some trades running. So we do have our sells on EURUSD. We do have our buys, or our buy plan rather, on what you call this, on gold, right? We have that as well. One trade that I've been waiting for, but then it didn't tell me because this is the one I had for you. But for some odd reason, this PC didn't tell me. CHFJPY. I wanted us to trade this one. It just didn't send me the alert. CHFJPY, let me show you. I'll tell you. There it is. I'll tell you. This is the move. CHFJPY, we were selling, and those are the buys that I was looking at 9, but unfortunately they didn't give me that entry. So that was, so how are we going to play this one, CHFJPY, because it might like the upside, definitely. And anything, of course, in between. Like I always say, you're not a bear, you're not a bull. You might get slaughtered, right? But it doesn't take away the trade-up. But anybody who still believes in the bulls will actually continue to 175. So somebody might buy at current price, being a little bit aggressive to go and test that resistance, right? So let's see how many of us have that in us, right? We'll look at it tomorrow again. That's CHFJPY. Righty. Let's move on.
What has made CHFJPY to buy?
CHFJPY, well, it's the wishy-washiness, if I can put it that way, of the Bank of Japan. Now, we've got the Swiss franc, who are definitely, undoubtedly dovish, right? They are dovish. And so we've got also the Bank of Japan, who is hiking interest rates. Well, they gave us, I think, 2 or 3 interest rate hikes this year, but are failing to commit to even more interest rate hikes, right? So the market is just basically unwinding those positions, all those sells. Remember, there's something I think I've mentioned it before, which is currency intervention. Have I mentioned that? Currency intervention. Have I? Currency intervention. Anybody? Yes, no?
Yes. Yeah.
Right?
Yeah.
Currency intervention. Would you like to explain it? Hopefully, I'm not putting you on the spot. In layman's terms, what is currency intervention? What's going on when we say there was currency intervention? Excuse the background noise. Am I putting you on the spot, Medino?
I'm trying to think of the right way. I can't seem to remember how to put it. Yeah.
Should I take it?
Yeah, take it, please.
Okay. So currency intervention, guys, is when a central bank intervenes in the market, right? Yeah, as I am about to explain this, it does come back to me that yes, I do recall explaining this. Let's say China. We've got China and we've got Japan. These economies or these countries, we know what they're all about, right? They are big exporters, they are manufacturing countries, right? They what cars come out of Japan. We've got Toyota, etc. And we know what China has for us, right? Now, these are exporting economies. They export a lot, right? Now, they don't mind their currency being weaker against the dollar because it works in their favor, right? It works in their favor because that means whoever is buying from them, as China, as Japan, they get to buy it cheaper. So, in other words, exports increase if their currency is less in value compared to the dollar. You follow that point, ne? Okay, I'm going into the second one. I just want to make sure that you understand the whole point of why they don't mind having weaker currencies in comparison to the dollar. Is that one clear?
Oh, yeah.
Okay.
Yes.
Okay. Now, the second point is this is where currency intervention comes into play. Currency intervention is when now that particular country, be it China or Japan, but in this instance, it's Japan, being concerned about the pace in which their currency is devaluing against the dollar. They don't mind it being weaker and devaluing over time, but not at a quick pace. It disrupts financial markets, right? It's not good for any economy to lose value rapidly. So what the Central Bank of Japan, the Bank of Japan does, they will come in, they've got traders all over the world, okay? In different trading hubs, in Sydney, in New York, in London, where else? Yeah, they've got them there, right? And then it's a synchronized thing. They'll send out a memorandum and say to these traders, we need to prop up the value of the yen. So what they will do is they will actively sell dollars by the billions on these charts, right? They'll sell dollars by the billions and essentially basically giving their currency a value. And this is where you start to see price. That's a currency intervention. Now, you don't have to guess hard about it or try and figure out when is the next currency intervention happening. No, when they are concerned about the rapid devaluation of their currency, they make mention of it. They'll talk about it for days, weeks before eventually intervening and actually actively dumping those dollars by the billions. Now, what that does is it doesn't have, it's not something that they're going to do forever. They will do it for a day, for a few hours. Okay, excuse me. And it's going to have some sort of effect. All it does is it slows down that pace of devaluation, right? So we'll see a sharp decline on let's say, what is okay, CHFJPY, USDJPY. The move is normal, and then right? But then when it eventually finds ground, it moves slower, right? It moves slowly to the upside. They know they're not going to get it to move downwards all the time, but they just disrupt that move so that the pace slows down. Nice and clear?
But practically, what do they actually do, Level?
Practically, they're selling dollars. They've
They
got
sell
those
dollars.
yeah,
Okay.
right? They've got all those traders all over the world. The memo goes out, and then that's what you see. They'll sell, right?
Okay.
They've got those, they're sitting on the systems and they're selling. So USD, JPY, practically they would be selling, right? Or
So they're selling at
I beg your pardon?
a lot of amount of money. They are selling with a lot of billions of dollars.
Yes, right? That's essentially what they're doing. Now I'm oversimplifying it. Now there's There's US Treasury bonds involved here that are being sold by the billions as well, right? If essentially, but because and also the largest holders of US Treasury treasuries outside of the US is China and Japan. China, I think, being the largest. If China wanted to collapse the US economy, they could do that. Simply just dump all those dollars, those bonds. Say, we don't want them anymore, dump them all, and then boom, there goes the economy. It's done. Right? But they know what effect it would have, not only on the entire world, but also on their own, how they go about it. Right? Because I think it's quite common knowledge that BRICS is a real thing and it's moving forward. Right? They've completed just the other day their card payment systems and all of that. Right? So they've everybody basically has been using what we call the Basel system. Not Basel, I'm sorry, the Basel is part of this. It's IBS, International Bank. No man, BIS, Bank of International Settlements. BIS. So BIS is basically the mother of all banks. No transaction happens in this world without going through BIS, especially international transactions. They would know about them, right? BIS. So now they've formed their own system parallel to BIS. This is BRICS, right? So there is definitely a move to de-dollarize, to move away from the dollar. So the US basically, as a superpower, they're losing those powers, right? They're definitely losing those powers. But a topic for another day. Let's not go too deep in that one, right? So that is basically what currency intervention is. Nice and clear. So the trade on this one was simply those sales happened way before what you call this, the intervention, way before interest rates was a big thing, right? So we've had interest rate cuts by the Swiss because they were one of the first to get into that 2% inflation target. And so they've been cutting by quite a bit. So essentially this downside, CHFJPY should be going to the downside because remember, we've got now one central bank, which is very dovish, and another which is meant to be hawkish, right? I would say they are hawkish, but they're not committing to that tone that they initially had a couple of months ago. They are opting to be a bit neutral at this point and not commit to a move, right? So the plan was CHF JPY, Euro JPY, GBP JPY, USD JPY now included, was all to be sells, right? Because we've got central banking policy divergence where all the other banks that I've just mentioned, except, all these other banks are dovish now, and the yen or Japan is hawkish, right? Just like we played it for the last 3 years or so, right? From say 2020, where we had still the same thing, central banking divergence or monetary policy divergence, let me put it that way. We had the Bank of Japan extremely dovish, and all the other banks were extremely hawkish. Everybody was hiking. The Bank of Japan was, lowering interest rates. And so USD JPY, Euro JPY, GBP JPY, CAD JPY, AUD JPY, NZD JPY, we were buying against the yen. All those were buys. It was 2022 easier because that policy was quite clear. We understood that everybody was hiking interest rates and the yen was going the opposite direction. There it is, nice and clear. So sooner or later, it should go the opposite way because vice versa now. Get this chart, you'll see the same thing. CHFJPY, USD JPY, it's all the same, right? We were playing also those.
No, my point is,
I'm losing you?
yeah, Mr. Lebo.
Yes, say that again. Sorry, I was. Yeah.
Yes, I was saying now. but I've not get a reason as to why the CHFJPY is buying now, because I've said uh, the Japanese yen, it is hawkish. This means they have increased the interest rate. I should expect selling in the CHFJPY.
Yes, right. You should expect sales on CHFJPY. But I've just said that the Bank of Japan has opted to be a bit neutral and not commit to being more hawkish than they are right now. Now, okay, this will help you. This will help you. Let's go to this year. Now, if you compare the interest rates, where am I? Okay, it'll open up. Remember, what I've just shown you, I went to the weekly chart on CHFJPY and I showed you for at least since 2022 how that has played out. It goes beyond 2022. Since 2020, as a matter of fact, CHFJPY has been bullish, right? CHFJPY has been bullish. Now, we've got the Bank of Japan, who has been dovish for the longest time. They had their interest rates at one point at a negative, right? And all these other guys, the Swiss franc, the Swiss, the US, the UK, everybody else was hiking interest rates. So it was an easy sell. We are selling who? The Japanese yen against who? All these other countries that I've just mentioned. So on the chart, where's my pen? When I need this pen, it doesn't pop up. Okay. Let's try again. Okay, there we go. So USD JPY is moving like this. GBP JPY moving like this. CAD JPY, AUD JPY, NZD JPY, Euro JPY. Who else am I leaving out? Everybody's been up against who? The yen. So the charts, these charts, all these currencies that I've just mentioned, they were going up against JPY. GBP, JPY. USD against who? JPY. CAD against who? JPY. You name them, right? All these economies or currencies were appreciating against the yen. So all those charts were going like this. Why? It's because all these other countries to the left, all these countries to the left, right? Hiking interest rates. And the yen lowering
Interest rate.
Thank you. What do we call this type of trade? It's called a carry trade. Remember I taught you this early on? It's called a carry trade. Right? Basics. Remember, I'm going to, I said, if somebody says, or if somebody's asking, or rather, let me put it this way. There are two companies, okay? We've got company A and company B. You want to invest. This one says, you know what? We can give you 0.10% year on year. And company B says, you know what? We can give you 5.5% year on year. Who are you going with? I mean, who are you going with? 0.10% or 5.5%?
5.
Right?
5.
You're going to go with where you're going to make the most return on investment. Never mind the other moving parts, the risk. No, I'm just oversimplifying this. It makes sense to put your money here. You're going to make your money. So that's what it is. In this instance, this is the yen, right? This is the Japanese yen. In this instance, this is the yen. And here, this is the pound. This is the US. This is the euro. Everybody has got higher rates compared to who? This guy here. In fact, this guy is giving you a negative. Why would I put my money there? So on the charts, Euro USD, GBP, JPY, CHFJPY. You see it now? You see it? Okay, sharp. Now, when we come here, we have to look at the current interest rates of the Swiss against the yen. Sure, the yen or the Bank of Japan is hawkish. They're hiking interest rates, but are they any higher than the Swiss? Bank of Japan sitting currently interest rates at only 0.25. The Swiss, where are you? The Swiss. Let's expand on this list. Switzerland, 1%. So who's giving who more? Who's giving us more here? Is it Japan?
Switzerland.
Switzerland, CHF. Right? So now when this guy here, Japan, right, who is saying I'm changing the game, I mean, I've Swiss who are going the opposite direction. We've got these two currencies or central banks going in the opposite direction, yet, fine, we know how it's supposed to play. CHF is supposed to be bearish. If the Bank of Japan is not going to commit to further interest rate hikes, which actually mean that the currency, the yen, will appreciate even more, sells and continue with buying the Swiss franc against the yen, because what I get more out of the yen. I mean, I get more out of the Swiss move. Is it making sense? Yes, one is still more for the Swiss, right? I was willing to sell the Swiss, provided that the Bank of Japan commits to being hawkish, right? It made sense, but now they're not. Then they're choosing a more neutral tone. So as investors, we say, okay, hang on, maybe it's not worth it then, right? We're willing to, go the other way, but now they're not committing to that. So let's continue buying CHFJPY. So now technically resistance have been broken, so let's buy. This move here, I was expecting it to because this initially be traded, but if you missed it, you'll catch it on the plan. Violate that level. Well, it didn't let me know. Fibonacci as well may confirm this is a golden ratio. This needs to be corrected. It might not be. So not quite a golden ratio, but we distance. Now, we'll in CHFJPY. Shall we move on? Time is not on our side. Okay. Gold. Let's go back to gold. XAU USD. Did I not give you an assignment? I could have sworn I give you an assignment. I'll listen
Gold
to
had
recording,
a deeper
but
pullback.
yeah.
Maybe what was the reason, Mr. Lebo, for the gold?
No. The question is, did I give you an assignment?
Assignment?
Yeah. Nobody's answering that. You're going left. Never mind the pullback on gold. What was the assignment? Did I give you an assignment? Yes or no?
For sure.
I
Maybe
think
I don't
no,
remember.
Mr. Lebo.
That means
I
you
think
didn't
no.
listen to the recording over the weekend.
Uh,
I don't think if you gave us, maybe.
Only the thing you said, if we got technical analysis, we can show it in the group.
And say that one more time for me.
If we got technical analysis set up, we can post it in the group. That's all I think.
Oh, okay. I think you're quite right with that. Assignment was to continue because remember I said we have this move. We said, okay, we hit record highs. We understand why. Actually came down. It was tapering interest rate side. Went in 2022. We're meant to go sideways and then eventually at least come back down to test this 1400 level 13. Yeah. Let's talk to and what were the events 2020. Let me use this 2020. What happened in 2020? Change the color. 2020, what happened?
Pandemic.
Network. What happened in 2020? COVID pandemic.
COVID.
2022. Why did we peak instead of, because remember, This is where the Fed now starts to hike interest rates. But we peaked, right? We peaked just before that, and then we continue to push higher. But this peak here, interest, so, we now are, giving the peak. What happened in 2022?
Not Ukraine war. No,
Right? 2023, what happens?
that's Israel.
2023,
Huh? I don't know.
last year,
Israel and Hamas.
before that. This one was just before that. It might be a tricky one, but this one was the US banking turmoil.
2023.
This is where the Silicon Valley Bank, one of the largest banks in the world, collapsed. Boom.
Yeah.
Followed by others.
Yeah.
It was almost a
Doing a
domino
Swiss
effect.
bank.
In March
Swiss bank,
2023,
yeah.
No, not
the
Swiss bank.
shockwave.
One bank in this
Ooh,
I forgotten that I was very conversant with that news.
is the line clear? I think there's a delay in the audio.
No, I was talking about the bank.
Yes, go ahead.
This town in US that has many tech companies. The bank located there. I've forgotten the name of the bank.
Yes,
It keeps
100%.
people.
100%.
Yeah, I think Silicon Valley. Yeah.
Yes.
Yeah.
100%. Do you remember that? 100%.
Yeah.
That's the Silicon Valley Bank, SVB, right? So this, they say the US banking sector turmoil sent a shockwave through the global financial system. Silicon Valley Bank, the 16th largest bank in the country, collapsed in a matter of days, followed by Signature Public Bank, marking the largest bank failures after Washington Mutual Bank back in 2008. Triggered by sizable deposit outflows, this event raised concerns about the soundness of the rest of the U.S. banking sector. In particular, other banks of similar or smaller size with large amounts of uninsured deposits, unrealized losses, and commercial real estate exposures. So, yeah, this brought about a lot of uncertainty in the market because, yeah, I mean, losing a bank like SVB, definitely didn't, bring about confidence, so especially regional banks, everybody was concerned about that. We're going to see a lot of regional banks collapse because remember, small businesses, they don't bank with these large banks. They, bank with regional small banks. And if they're struggling, which we know that small banks and rather small businesses and households are struggling, there are a lot of defaults on their loans or credits. Essentially, those may collapse too, right? So that was the end of 2023, right? A new high, close above. And then we have this high here, which seems now to have definitely broken that late in December last year, 2023, Middle East war. There's clearly a lot of concern about this Middle East war because, well, of where it's happening. And I said just now I said gold doesn't contribute to inflation. It's merely an inflation hedge, right? It can be used as an inflation hedge. It's something that is, attract any investor or trader under any uncertainty. And there has been a lot of uncertainty this year with that Hamas war, right? We've had this parabolic move. What is a parabolic move? It's when, what's going on here? Let me just screen. There we go. A parabolic move is when your chart doesn't move at an angle, right? Let's change that color. That would be nice. Eventually, let's try again. Okay. Price tends to move this way, right? It's angled. We can draw a trend line if you like. Not this. It's a parabolic move. It's hard to really join in on that fun. And for many retail traders, it has been extremely difficult. Everybody's just seeing gold going up in frustration, and it can't be a part of it, right? So, sure, the war has contributed to this parabolic move, but is not the only thing. It is now the monetary policy shift or change by most central banks, right? ECB, BOE, the Swiss, Canada. Who else am I leaving behind? Everybody changing from hawkish to dovish. Now, of course, when all these banks are doing that, the entire market also anticipates that, the Fed is also going to follow suit eventually, right? So the dollar weakens. And as the dollar weakens, gold pushes higher. Now, it's not the only thing. It's not because of just only central banking policy change and this war, but also, that point is gone now. I'll remember it. It's gone. English bundles depleted. And it's such an important point that I wanted to make that contributes to this bullish gold move. Oh, yes. It's also central banks in the background actually buying a lot of gold, physical gold, piling up on their reserves. China being the biggest of them all. China has bought tons and tons of gold. Please don't ask me where is the proof. You can find it. Google it for the sake of time, right? Let's Google how
Are
much.
they saying it's China and Russia, or
Yes,
they're
China
and Russia? They are the
course.
biggest countries buying a lot of gold.
Exactly, right? So they've been piling up on their gold reserves. And of course, it would make sense for Russia to pile up on their gold reserves because, well, they've got a lot of sanctions. So this is where the gold would work for them, right? So yeah, we've got a lot of central banks this year really, buying gold by the billions, if not trillions. And that other so aggressively to the upside, right? I mean, you wouldn't have thought that 2,000 would get to 3,000 in 1 year. That's exactly what's going on right now to this point for that to happen, right? We've passed those uncles. We need to acknowledge them one way or the other. We will come back to this point. And this will be fair value for anybody to get back here a year or two, but we will get here. And when we get here, best remember that I'm saying you should be buying, right? And also investing, having those shares on gold because those work even best for you, right? At this point, that's discounted at 2,000. You buy it. Alrighty. So that's our gold.
I was having, Mr. Leb, I'm having a question.
Yes.
Yeah, do you see since 2020, 2020 there was COVID, and 2022 there's Russia, war is Ukraine. But according to quotations and
losing you there,
we're supposed to see gold rising because people will be buying gold for their safe haven. But why?
Sorry, I lost the first part of your statement.
You're saying?
You said 2020. Okay, fine. If you can just start off for me again, yeah.
Okay. The way you have labeled there, 2020 was COVID. As you can see here, gold was started to fall. Then it came to rise in 2022 to come and test the high of the 2020 there. Then you labeled it Russia invades Ukraine. Then gold sold now.
And you are expecting it to be bullish because of this geopolitical event, right?
Yes, because people are going to they're going to buy gold because it is one of the
very fair observation.
I'm contradicting myself there.
No, very fair observation. 22 banks now becoming hawkish. US for now, the Fed, they are no longer lowering in hiking interest rates and are hiking them. We are no longer hiking interest rates. We're going to taper, stop this QE program, and we're going to hike interest rates. So that's 20. So the dollar strengthens and takes over, and gold comes down. And I guess Russia didn't matter that much, this Russia and Ukraine war. Now, if you remember, yes, initially a lot of people were up in arms. It was a thing, but soon after that, we kind of started not really focusing much on that war as well, right? We had already priced it in. It failed to break. We've got central banks changing their policies we've got the dollar, of course, hiking interest rates. That brings about weakness to the gold, right? To the gold. I think if we'd really seen two things happening, right, we would have seen an appreciation of the dollar and gold at the same prices beyond the twos.
Yeah. So, and in 2020, now what made also gold to go down? Because it was a pandemic.
No, 2020, remember, I put it. Okay, simple, because I remember this quite clearly. So 2020, we have lowering of interest rates, weakening of the dollar, of course, and appreciation of gold. We peak, right? We peak, but then something rather very strange, which is this as well. Anyway, we held them for a little while. So now the rationale behind this, or the explanation by many economists out there, was that there was no genuine concern about the global economy, and so therefore gold took a back seat. Because leading up to 2020, from about at least 2018, of gold increase, it is the yield curve. If I can show you the yield curve, and the yield curve, let's see if I can get to the yield curve. 10-year minus, what is it again? Minus, okay, let me just hit enter. I'll find it. The yield curve. So this is what economists, investors use as an early warning system, right? As an early warning indicator for a possible recession. Okay. I'm trying 10-year. No results. Okay, let's try this. I need to type. Let's see. Right, that won't work. Okay, let's go back. There it is. So the yield curve basically, every 8 or 10 years or so, like that appear now. I'm in a totally different page now. Okay, let's do this. This is not it. Give me a sec. St. Louis. Hopefully it'll open. I think this is the one. Yeah. All right. Fine. Houston, right? I think this. It should be yield. Let's try. Let's see. Okay. Ten-year maturity. Let's see what I get. Yeah, there we go. 10-year treasury constant maturity minus the 2-year. This is what we call a yield curve, right? Yield curve. So you'll see back in 2019 already, if it loads, 2019. Okay, let's see if we can stretch it to 2019. 2019. Okay, all right. How can I zoom in on this? Okay, a little hard, but you see this solid black line, right? It's 0. Now, if you look into 2019 August, already we can see this blue line dip below it. Now, whenever that happens, you definitely have a warning for a recession. There's a possible recession on the way. So already in 2019, that happened. It dipped below 0. When it dips below 0, we say the yield curve is inverted, right? Whenever you have an inverted yield curve, a recession follows. And as you can see, 2020, the recession did follow. So when there's a lot of us who are looking at the same data, and when we see that, what do? That brings about some uncertainty. So what do we do with gold? We buy. sharp. So that's what we did. We bought gold. Now, we bought gold up until indeed the recession happened, peaking, right? Now this time around, the uncertainties were addressed very swiftly by the Fed and many other central banks by quickly not saying we are still looking at the data, we still, no, they quickly changed to QE, right? They moved quickly from being hawkish to dovish and bringing about a lot of confidence in the economy, right? And that's why your gold goes down, right? That's why your gold goes down. Does that explain it?
So they went dovish you said they went dovish in order to print more money to the
100%. They definitely came to the rescue much quicker than any other time when they had a recession, right? So there was no genuine concern about the economy. Everything pretty much, got saved, right? Because remember, I said we looked at that balance sheet and we saw how it spikes in 2020. That's trillions of dollars being pumped into the economy. So everybody had money in their pocket. So there was no uncertainty. And so gold goes down.
so it means people won't be buying gold because there is also there are a lot of dollar. What can I say? There's the value of dollar. I mean, meaning people are having a lot of money. Maybe I can say that.
Yeah. If you have a lot of money, the economy seems okay. Everything is seeming okay. I've got access to credit. I've just bought a car. I remember very well, like I said, and I've said this many times. I remember my wife asking me back in 2020 that a lot of people are buying new cars. She's seeing a lot of new cars on the road. But I've told her that, the economy is in a bad shape. I said, well, yes, because, everybody, when the economy is in a bad shape, the central bank basically makes access to money much more easier by lowering interest rates. And so they flood the economy with money. And so you go and buy your car because now all of a sudden you can afford it on credit, you can buy your house, you can, so it seems to be okay, but it's just a band-aid. We're not really solving the problem at hand, right? So that's what happened basically in 2020. And like I said, it was a band-aid, and we are not quite in the clear yet. There is still a recession and a big one looming in the background. But I have to explain, I guess, just go a little further tomorrow with the yield curve, right? And explain it. So that's how it basically played out. Any questions? I think what I'll do is tomorrow we will look into the central bank, those monetary policies, right? And as we, because we were on October, right? We want to look at to December and then move on from that and talk about or look at what they call or central banking forecast, basically. Let's look at their forecast and where to find them and how it helps you to formulate a fundamental bias as well, right? And knowing exactly what the Fed is likely going to do in the near future, next year, the following year, etc. All of that is available to us. So I want us to look into that as well tomorrow. Any questions as we close up?
Yeah, maybe I have a question here. Hello.
Yeah, go ahead.
Okay. Yeah, I was just trying to get a bigger picture about this can say this strategy maybe is that maybe in the long term, let's take an example for the US dollar as how maybe I have understand. That's why I want to explain then is to see if my explanations are okay. According to what I've understood is that maybe like now the US dollar is strong because of some economic data. But I believe as we are going in weeks, maybe this week, the coming week, I believe there'll be data. There are some economic data which will come. I believe won't be good for the dollar. This means the investors will react accordingly. This means maybe they are going to sell the dollar. So it means when you go to the dollar index, you'll find it is selling for a certain time. Then after that, maybe there will come also other economic data which are supporting the dollar. So it means the dollar will continue to rise. But what I've realized is that, so it means the dollar is strong, but it won't just be strong all the time that you are going to see the graph just going up, going up, going up. It means in the long run, the dollar is strong, but there'll be some economic data which will push a little bit down, then it will go up, a little bit down, then going up. So I think maybe when you're trading,
I fully agree with that.
So it means when you are trading, sometimes you are going to sell the dollar, but in our minds, we believe that the dollar is still strong because maybe you're going to sell because of some certain economic data, which has currently appeared that you're going to sell the dollar. But we believe that we are selling maybe for this week, maybe dollar has become bearish for this week, but maybe starting from the next week and the coming week, then maybe the economic data will change to be positive. This means we are going to change our bias again, continuing to buy the dollar. So maybe, is that okay? Yeah,
that's perfectly fine. If there's anything I can say about the dollar's performance, I'll have to go back to 2020, the last quarter of 2022, right? Remember, we spoke about cyclical and seasonal trends, guys. Remember? Cyclical and seasonal trends. And I said seasonal is short, right? It could be a month, it could be a week, it could be whatever. But cyclical, we are in that presidential cycle. It's a cyclical trend, and it's been going on. We said the last 2 years, so 2023, 2024, right? Those tend to be a risk on year, right? So we can see from literally the last quarter of 2022, which anyway, the last quarter of the year tends to be risk on, right? You can see the dollar lose or depreciate in the last quarter of 2022. We don't have a clear, smooth move to the downside. We've been a little choppy, but overall, in the last 2 years or so, the dollar is basically bearish. If we look at, let's say, this year, let's see how much selling have we seen for this year. If we were to look at the peak, right, from here to where we retrace, this is what's going to be telling because we're in this risk on. We have been, right? So this is the high that we've seen for the year 2024. We saw it back in April, okay? Then we went all the way down and we've had quite a significant correction. But this is the telling point. We are in that, right, where we should definitely see a continuation to the downside. Especially that we are in the last quarter of the year, October, November, December, right? We can look at it this way. I mean, there's October last year. Here it is October last year. Look at it. October, November, boom, December. You see that? October, November, December. Now, this, of course, is a short-term move in the bigger scheme of things. This is a seasonal trend. We know that the last quarter tends to be risk on. October, November, December, that's last year, right? So this October has been around a little strange, right? We've seen, I guess, a corrective buy. We could see a sell. I think anything above this point, then we're definitely risk off. We definitely have a strong dollar, right? So in the bigger scheme of things for the year, we are technically having, we have a weak dollar. So yes, there is some buying. We've had interest rate cuts. We especially because of that central banking policy. Central banking policy effects are much more, I guess, how can I put it? Much more significant on the charts. They're much more apparent than any other thing. Central banking policies, you're definitely going to see those effects on the chart. So them cutting interest rates, it's not something that brings value to the dollar in any way, right? I think we've gone through that one quite a bit. You lower interest rates, you weaken the dollar, the currency goes down. So let us see. Now, of course, we understand why some of these buys are here, or why it's a corrective, buy. we're going to sell. But we also have, those geopolitical events taking place, coupled with, positive data coming out of the US, pushing this even more. But then, of course, remember, the more the data comes out positive out of the US, this brings about confidence from the Fed to say, oh, okay, the economy is still resilient. It can still handle more rate cuts. Right? There are no, everything still seems okay, right? We still have a resilient economy and our inflation data is going down. We can cut some more. You follow the thought process behind it.
Yeah.
Yeah. So, yeah, but everything that you've said, it's correct. I was just merely correcting one or two things there.
Mm-hmm. So we are going just to react according to the market now.
Yes, right. So, of course, like you said, if this data that comes out tomorrow and it's positive for the dollar, of course, the dollar will nudge up, right? But what's long-lasting is central banking policies. If they have another significant interest rate cut, that will definitely weaken the dollar. Or should we have negative macroeconomic data come out, it will weaken the dollar. We will see the dollar come down a bit. Right? On the day. Maybe just for the day, maybe just for 2 days. It gets priced in and then yeah.
Okay.
All right.
And also maybe the last question for me. I remember in those free sessions in the Forex MG group.
Yeah.
There was something I was seeing on the chat, like I don't know pivot points.
Oh no, sure. I'll share those with you. Don't you worry. I'm gonna share with you. But no later than the 4th of November, we'll have concluded our well, not for you, of course, right? But would have concluded everything on the curriculum, and I would have shared those pivot points by then, right? Would have shared the pivot points by then. We've got quite a bit to cover. So basically, in this next 2 weeks, I will be moving with a bit of pace, but not, taking away the quality, of course, right? Well, whoever doesn't understand anything, feel free, you must ask, right? I don't move on until you understand. So
it means on your trades, you always use that, or maybe it is not working. And in your trades, when you enter, before
it's that the pivot point that you talk about, that you ask about, it's merely a tool for confirmation as well. I will always ask or encourage rather traders to learn price action, and it teaches you to pay close attention to detail. Just a naked chart, as you can see, there are no indicators with the exception, of course, of the Fibonacci. That's it. And maybe sometimes the moving averages. But I want you to be able to go front, go back, go front, and it's hard to forget price and how the market has reacted to a particular price over time. You can wake me up any time of the night and I'll tell you what GU is, where gold is, where EURUSD is, where USD CAD is, where USD is, because those are charts that I've been looking at for years, days in and out. I kind of tell, I can, it becomes just part of you. Right?
Yeah. So we should not rely on that much.
Yeah, no, indicators are they're just there to just add a bit of value, just as complementary tools, or confirmation tools, right? They do bring about some value, but you don't want to be over reliant on them because you miss the whole point. You can't just simply look at your pivot points and say, oh, it's right here. This is where I should be selling. This is where I should be buying. No, you need to, it goes a little deeper than that. There are fundamentals. Fundamentals is what moves price, not technical, not pivot points, right? So you will understand that price may violate where your pivot point is saying this should be a selling zone, but price actually continues. This is where it should be a buying zone, but price actually continues to fall beyond that point, right? Because there's fundamental reasons for that. So we merely use it as confirmation tools and also as as a tool that helps us with entry. Number one, it will help you with entry. It will also help you with targets as well. So already we know for the month, if we're bullish, this is what we are targeting. If we're bearish, this is what we are targeting for the month, for the year. All of that is there, right? So we already know what chart has reached its target for the entire year. It might go sideways now from this point, or might start playing games. It will help you with those things, right? Because it's a tool that's used by institutional traders, right? Yeah. Let me just answer this last question here on the inbox. Is it gonna fall at least at 103.700? Yes, this is what we expect. I heard you speaking about the hundreds. Yes, you're correct, right? So where are we currently on? I assume you're talking about, of course, the price on the dollar index. So 103.68. And the question is, when we get to 103.700, could we expect a sell of some sort? Yeah, it's a psychological price point. We could likely see a sell happen at that point, right? So it's a pretty I don't engage the dollar index in terms of trading it, but it's just a chart that I use definitely that informs my trade decisions on other pairs and other, I guess, instruments that I trade. But I don't particularly trade the dollar index itself, right? But yes, observing that 103.700, I wouldn't sleep on it, right? Because that's where we might see those sales take place. And if we are having those sales on the dollar index, then of course your GU, your EU, and of course gold may appreciate even further, right? So let's leave it here for tonight, guys. We are overdue on our time. We've overshot it, I meant to say. Let me catch you tomorrow. Same time, same place. Shaya this. Shaya that. I'll see you tomorrow, guys. Thank you. Thank you. Great session.
Bye.
Bye-bye.
Thank you.
Thank you. Bye.
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 All right, it's stuck on my side. I guess you'll just log yourself out.